Alright, welcome back to the channel everyone. Nick Armenis here. I hope you've been enjoying my videos. In today's video, I'm going to talk to you about some high growth ETF options for 2021. Now, for those of you that haven't seen my previous ETF option, I recommend you go back and watch that one. This will kind of follow on from there and just give you some options to add a bit more, I guess, excitement and some cool themes in some really big growing areas of the economy. So before we get any further, guys, please note I'm not a financial professional. Read through the disclaimer, blah, blah, blah. You know the jazz. This is my ETF strategy that I showed in the previous video. So I say, choose 2 to 6 of your favorite ETFs. And the bit we're going to focus on here is have some high growth trend or theme-based ETFs. So I've added this point in here. And the reason you'd want to have some of this is just to supercharge, I guess, your returns, right? If you just invest with the index, you're going to get that return, right? So if the index returns 10% per annum over a long period of time, then you're going to end up with 10%. Some of these are returning 20 and even 30 over reasonably long periods of time. This may change, but these are areas of the economy that are growing, and so you want to have some exposure to some of this. All the other points here, so looking at all these bits like liquidity size, past returns, some of these will be hard on these newer ETFs, but I still recommend you still have some access to them because they are quite large and they're from quite reputable ETF providers. The rest of this, guys, just please go into that video and watch it. I'll leave a link below for you to do so, but let's get into the crux of this video. So the first ETF I'm recommending is ASX ticker TECH, T-E-C-H, and it's the Morningstar Global Technology ETF. So my investment thesis for this is pretty simple. So with each of these guys, I'll quickly take you through why I like them, and then I'll actually go into the website and talk you through the ETF in a bit more detail. But tech, most of the growth in our stock market is coming from technology. So this ETF covers hardware, software, and IT services. And it's not really Australian companies. It's giving you exposure to lots of different companies all over the world. So as I say further down here, it's different exposure to the NASDAQ NDQ ETF. It gives you exposure to Germany, Israel, Japan, and Switzerland. So it's not just US based, it's not Australian, it's giving you some exposure to the rest of the world. It gives you a simple, low cost way to access global tech. 0.45% is the fee, and it's got a great track record of 30% per annum since inception. So it's also outperformed the index that it tracks, which is the Morningstar Tech Index. The exact name, I'm not sure. I'll have a look in the next section. Over the last 5 years, it's actually outperformed it, which is awesome. And yeah, as I said, exposure to other parts of other countries other than the US in tech. So let's go into ETF securities. And here is the ETF, guys. So invest in global technology companies encompassing hardware, software, IT services. Okay, so it gives you access to a lot of these things just simply don't exist in a big way on the Australian stock market, and accessing it through this ETF gives you, I guess, one, access to different countries, and two, it doesn't mean you're trying to pick one stock and hope for the best. You're getting exposure to 25 to 50 global technology companies. So we're talking software, semiconductors, data processing, computer equipment, and databases. So these companies are all screened by Morningstar's priority moat methodology to include companies that are identified as possessing strong competitive advantages relative to peers. So they don't just go and pick anything, guys. They're looking at strong moats, and they're selected on the basis of how attractively they are priced relative to their fair value. Okay, so there's a bit of rigor that goes into selecting these. It's not just, okay, here's the biggest ones, let's choose those. So it's diversified, because obviously it's multiple different industries, different stocks. You're not just picking one. And yeah, it is a liquid, transparent way to access these, guys. So you're not just picking a random bunch of stocks yourself. This has some really smart people going about selecting it. So go and have a read through this as well, and just understand what comes in here, because have a look. Some people would assume that Amazon and Facebook are in here, but they're not, because they don't come directly from the sale or licensing their technology. So Facebook doesn't license the Facebook algorithm out. It sells advertising. Amazon doesn't license its algorithm out. because most of its its revenue doesn't come from their technology. So Amazon may be in more cloud-based ETFs, if that makes sense. So this is a really cool ETF, guys. Have a look through this section here. Also have a look through the next portion down here of their what is the ETF made up of, and then have a look at some of these companies. Okay, I know Applied Material is a very big company. Uber is in here, Palo Alto Networks. There's lots of companies outside of the NASDAQ, which is really, really cool. So if you're really interested, what I'd do is I'd grab these and just understand what these companies are. So really big companies, as you can see, at market cap of $107 billion. These guys are a software company from memory in the chip space. Okay, so have a look, see what these companies are. Do you like them? Do you not? And then move on to the next section down here and see country allocation. Now, while the US is the biggest portion in this, you do get access to Japan, Israel, Germany, Switzerland, etc. Right? So great way to get access to these countries that you probably haven't got access to. And look at this, 30.39 return, which is absolutely phenomenal. And sorry guys, I said before that this one had outperformed. I believe it's one of the other ones because this one is pretty much on par. So it's only just missed the index. So very, very close to tracking that Morningstar Tech Index. So that's the tech ETF, guys. Let's move on to the next one. So guys, the next ETF is the Battery, Tech and Lithium ETF, ASX ticker ACDC, which is a pretty cool little ticker. So again, reasons very, very simple. Simple, efficient exposure to advances in battery technology and rising demand for lithium. So this is the energy storage megatrend. So think, Tesla, think all of these electric car companies, think batteries, think any way, anything, I guess, related to energy and storage, or batteries. So anything that requires battery storage, and all the way through the supply chain, which is what's really cool for this, guys, because the battery value chain is huge, right? So it's mining companies, manufacturers, and technology providers. So it's not just companies that are in, maybe like a Tesla or something like that. It's the whole way through the supply chain because everyone is going to benefit through that. It's not just going to be those companies there. So think about the companies that produce one small component on a Tesla battery. Think about the people creating the graphite, the lithium. These are all in here. So, global coverage to capture the growth in industry as a whole means you aren't vulnerable to just one company again or a micro sector. So particularly for new industries, it's very hard to pick which stocks. It's very hard to find the Teslas because everyone would have been doubting Tesla and did, right? So I doubted Tesla for a long time. And obviously I was completely wrong thinking about this in an old school way of, the financials here just don't stack up. This can't do well. So picking these businesses is quite hard, guys, and finding them. And if you invest in an ETF like this, you're not going to be, I guess, vulnerable to picking the wrong stock. So these are fast moving industries, so it can be very hard to pick individual winners. And guys, demand for energy storage is being driven by the movement towards emissions reductions and renewable energy such as solar and wind. So when energy is created by these sources, if it's not used up straight away, it needs to be stored somewhere, right? So this is what this ETF aims to do, invest in companies that are going to benefit from that. So again, let's jump into this. Again, have a read through it, guys. It offers investors exposure to the energy storage production megatrend, including companies involved in the supply chain and production for battery technology and lithium mining. Why invest in it? Battery device consisting of one or more electrochemical cells that are capable of generating electrical energy from chemical reactions. Battery technology is central to the growth of renewable energy and electrical vehicle usage. So investors may consider this an investment in environmental sustainability. It is an established technology with continued innovation and is expected to aid the global transition to clean energy. So anyone wanting to invest in clean energy as well, this is a way to do it. So let's go in and have a look at, what companies are in here. So Pilbara Minerals, PLS is in here, Galaxy Resources, both lithium miners. We've got Tesla, AMG Advanced, Renault. There's lots of companies here. So we've got car companies as well that are, and Samsung, Nissan. So we've got a mix of different sectors, right? We've got industrials, materials, consumer discretionary, and IT. So I really like it. It's got exposure to a lot of different things that you probably haven't thought of, and different countries as well. Look, Japan is actually the biggest makeup of this, followed by the US and Australia, South Korea, and so on and so forth. Really cool ETF, guys. It's had a pretty good performance so far. It is a very new ETF, but yeah, in a year, it's had a return of 59.36%, which is absolutely amazing. So definitely worth considering ACDC. Okay, so the next one I wanted to look at and bring to your attention is the Global Robotics and Automation ETF, ASX ticker ROBO, ROBO. So ROBO offers exposure to a transformational technology megatrend, the increased adoption and utilization of robotics, automation, AI. Very big themes that are obviously growing and will continue to grow well into the future. So definitely worth getting into this. Again, we're diversifying away from areas that Australia's not strong in. It's got a strong track record of 21.27% since inception. And guys, there is an alternative to this called RBTZ. Robots has a lower management fee, but a slightly different exposure and lower performance. So if you love this trend, you could buy both and get slightly different company exposure, because they do have a bit of a different way of selecting stocks. So it is a bit different. Just wanted to bring it to your attention. I'll take you through both of them quickly. So yeah, invest in robotics, automation, and artificial intelligence through the ETFS, Robo Global Robotics and Automation ETF. So it basically tracks the Robo Global Robotics and Automation Index to, I guess, invest into 200 global companies related to robotics, automation, AI. So the areas they look at are manufacturing, 3D printing, logistics, security. And again, it looks at market cap and trading volume, okay, as well as Robo's global ESG policy. So these aren't just selected based on market cap. There's a bit more thinking that goes into this. So have a look at the stocks that they invest in. Again, 3D Systems is in this, iRobot. There's lots of companies here you've probably never heard of, guys. Have a look at the top 10, see what they do. Again, as I showed, just put it into Google, have a look at the company. Is it big? What do they do? And see if you like the top 10 holdings, because that's where most of, I guess, the allocation is. Most of this is IT companies, some industrials, some healthcare, and then a little bit of consumer discretionary. Mainly US driven, but again, we're going to get access to a bunch of different countries here that we normally wouldn't. 3-year return of 20.41%, 1 year return of 41.46%. So very good returns again, guys. But don't be surprised if these, level out over time. But again, as I showed you, because these are new trends, they're growing faster than, say a VAS or VTS or VTG, any of those. These are growing much, much faster. So again, here's the Betashares version of this. A little bit different, lower cost than the previous one, but you'll have a look and see that this one seems to, I guess, have completely... So we've got NVIDIA, which makes up a good portion of this. So the only thing I wouldn't like about that is it seems like the weighting is huge towards something like NVIDIA, right? So if the price of NVIDIA changes, this ETF will change vastly the performance of it, right? Which can be good or bad. This is more Japan driven, less US, but again, similar other countries there, but just have a look through and choose which one you prefer. Okay, so the next one is the Global Sustainability Leaders ETF, ASX ticker ETHI, ETHI. So it gives us diversified exposure to a portfolio of large global companies that meet strict sustainability and ethical standards. So if you want to align your investing to your personal values and you want to invest in companies that are ethical, whether it's responsible towards the climate and things like that, these companies, this ETF is certified by the Responsible Investment Association in Australasia. It's got a strong track record, 20.62% per annum performance since inception. And guys, ethical investing, whether or not you agree, disagree, whatever, it's been growing at a rapid pace and is where a lot of government funds are being placed. So I think climate leaders, socially, environmentally responsible companies, no gambling, alcohol, junk foods. These are the main things they tend to have or don't have. So this is the sort of stuff you'll be investing in. So let's jump into the actual product page. What I like about Betashares, they always have a little video, so make sure you have a watch through that, guys. The fees are 0.59. It's a big ETF, guys, 1.2 billion in assets. And look, we've got access to things like Apple, Tesla, Nvidia, PayPal. The only thing I don't like about this ETF, guys, is it's really just these quite large companies. It's nothing groundbreaking. So if you have other ETFs like the NASDAQ, the tech, a lot of these companies could potentially be in here, right? It's mainly IT companies, so it's not really a clean energy. It's an ethical investing. So if you want a clean energy ETF, go and find one of those. Okay, mainly US based. So if you have a lot of US based ETFs or stocks, probably one that you may not want to invest in because you probably already have exposure to it. So the last ETF, guys, actually isn't out yet, but Betashares is about to release it, and it's the cloud computing ETF. So I'll take you through the page. I just thought it was an exciting one just to show you. So I've actually requested to be a part of this. You can leave your email here and do so as well. So why I like it is you can invest in a portfolio of leading companies in the global cloud computing industry via a single trade. So it's going to give you a diversified portfolio of companies operating in the cloud computing sector, one of the strongest growing segments of the global technology. So the benefits, growth potential, given much of the world's data and software applications are still maintained outside the cloud, the move is still occurring, guys. So there's going to be a lot of growth coming in here. And so this ETF is going to benefit from this. Again, we've got diversification, and it's a pure play exposure. To be eligible inclusion in cloud portfolios ETF, a company's share of revenue from cloud computing services must meet a minimum threshold, and large diversified companies whose global cloud services only represent a small part of their business are excluded. So potentially Amazon, Microsoft, Google, those big companies, they probably won't be in here. So what's good about that is if you already have NASDAQ and things like that, this will give you exposure to different areas. So although ETFs are diversified, guys, you want to diversify within an ETF portfolio as well into things like this. And this is going to be a very, very solid return. So you're going to have Xero, Shopify, Dropbox, Zoom, big companies in there, guys. So look at this. It aims to get 34.4% per annum compared to 12.4%, right? And 24.8% for the NASDAQ. So this should outperform the NASDAQ by 10% per annum. Just thought it was good, guys. It's not quite out yet, so just wait and see. Register your interest and you'll be notified when it's out, but I'll probably do a video once that comes out. So if you want some more options though, guys, I do like some really high-performing US ETFs by ARK. I'm not sure if you've heard of Cathie Wood. This is her fund, ARK Invest. And so they've got ARK Innovation, ARK Robotics, Technology, Next Generation Internet, Genomic Revolution, and FinTech Innovation. And then it's also got a 3D printing and Israel, which has a lot of tech ETFs. So if you already buy and sell US stocks, these US ETFs, obviously that adds a bit of complexity. And I will be doing a video on how to buy US stocks in Australia. But guys, the performance on some of these is actually ridiculous. So I'll go into the ARK Innovation ETF. If you're going to pick one, you'd probably pick this, unless you really like some of the other ones. I like the Israel one and the genomic one as well. And just have a look at the performance of this if we go out. Like, it's not even... So at the COVID lows, it was at $40. It's now, what, 155-ish? It's had a phenomenal run. So let's have a look at... Oops, sorry. Go top 10 holdings. These guys are who made kind of Tesla very famous. Tesla, Roku, Teladoc, Square, Zillow, CRISPR, Baidu. A really cool portfolio of very high growth companies. So this is a very high growth ETF. Cathie Wood has been known to find, big technologies before everyone else. And because the fund is so big, when they go into something, guys, it almost becomes a self-fulfilling prophecy where it goes up just because Cathie Wood has bought it and they've bought so much of it, okay? So I thought you might be interested in those. I think they're absolutely great ETFs, and you may want to get some exposure to it. So I want to take you through some of my upcoming videos as well. I want to show you how to choose the best ASX broker for you, and then how to buy US stocks in Australia, and then some earning season updates, which will probably be done sporadically, okay? So guys, if you have liked the video, please like, comment, subscribe, hit that notification bell, and let me know what new content you'd like to see. And thank you very much for listening. See you in the next one.